Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at FX and the British pound finding a little bit of a bid along with some of its other European counterparts. We saw a weekly bid just under 2% from the new year-to-date lows posted about a week ago. Yes, there could be some positives coming out of the economics and there could be some technicals in there, but really it's about the dollar, which has seen a little bit of a profit taking, maybe even a little bit of selling in that same time period. So it's really more of a dollar trade than I think it is a pro-pound trade. However, you can't look it away. Obviously, we made new year-to-date lows about a week ago, and we've rallied off that. And I don't think we've built anything. I don't think fundamentally we've seen any real changes, but it is what it is. And I think right now we're waiting for that next it moment in order to see probably more selling, I would guess, here at this point, because there isn't a whole lot to be looking positively at the pound, other than what we heard from Mr. Carney, the governor of the Bank of England. He talked today about the upbeat economy. He talked about some of the recent numbers that we've seen that have really exceeded expectations. And what the market's now kind of trying to hem and haw about is whether there's going to be a rate hike in August from the BOE. So right now, things could start to be moving, but it's a little too early to tell. And with all the uncertainty up in the air about what's happening in between the euro and the pound, it just seems right now that there's just no clarity. And anything we've seen over the last week is probably more short term, and you'll probably see sellers start to step in before too long. And lastly, let's look at Brexit, which is really the 400-pound gorilla, which is driving the markets both in London and in Europe. There still is no clear resolution. Prime Minister May and Prime Minister Urkel going back and forth. It just seems right now that the clarity, 9 months ago, you would have thought we would have had at least a plan in place, and they really don't have that, and they still are looking for the lollipop on the parachute to save them, and they don't have it, whether it's political, whether it's economic. We're seeing companies relocate some of their offices back to mainland Europe for fear of what happens in the fallout. Likewise, I think that the issues going on with Northern Ireland, or again, they're being pulled in many directions here, something I don't think we expected back in June of 2016 when this went through. Yeah, I didn't think this would happen overnight, but I certainly would have thought that by this time they would have had at least a concrete plan that they would at least be able to bring to the table and get together and start finding out, crossing T's and dotting I's and all that. They're not even there yet. So that's going to weigh on the pound itself. It's going to continue to weigh on it, especially as the dollar bids separately. It's kind of a double whammy. So right now, a modest uptick in the pound, but not something I would look for a sustained move. Likely sellers will be coming in. This could obviously change even more dramatically after the FOMC minutes come out this afternoon if the Fed continues to be more hawkish and they find more reasons why they want to raise 2 more times in 2018 instead of just 1. This is Todd Colvin coming to you from the floor of the CME Group.